Phoenix of the team.
Ooh, ladies and gentlemen, welcome back. Chart Talk 87. Shouts out to Wayne Corbett, white boy in the building. So let's jump right into the market outlook. Market opened really strong today and closed terrible. We look pretty awful to close the day, and I'll tell you why. Inflation fears are running rampant in this market. You look at the U.S. dollar; it's just trading around 52-week lows. Looks like it's headed there in no time. We look at the 10-year treasuries, flagging at 52-week highs here. So, we saw the NASDAQ come in at the end of the day. We saw the SPY come in at the end of the day as well. If we look on let's look at an hourly chart, you can see they're just like late day selling. Couldn't really advance, and things were looking strong this morning, and then everything kind of turned around late in the day with some pretty high volume selling. So that leads me to believe in the short term we'll probably see some more selling pressure. We do have some support levels pretty close by, so we'll see what tomorrow brings us. But the way we closed today, it's not looking that great in the near term. What are you thinking over there?
Very similar. So even if you pull up that first chart I have of the NASDAQ really quickly.
Yep.
So even that broadly, again, very textbook pattern. We've seen higher pivot lows. Again, as we get near support, you're going to have those fearful, topics that come up. I know you touched on it a little bit later. But even we saw kind of earlier in March, we kind of saw this first little pullback. We saw like a little consolidation. Then we had that next push lower to kind of shake everybody out. And we're kind of seeing almost the same thing right now where we look like 13,000 in NASDAQ was going to be that low. Now we're kind of aging back. Or more likely we might kind of follow similar action that we saw kind of end of February into March as we just kind of shift more into that range-bound consolidation market and away from kind of that breakout market.
So are you talking about this February, March sell-off?
Yeah. Yeah, so it's like when it held kind of like that 12,800, that area where like we kind of hoped that was going to be the low, and then it had a push and kind of shake lower. We're kind of seeing a little bit similar on a smaller scale here where it's like it held 13,000. That could have been thought of that was going to be the new pivot low. But now as we're starting to close weaker today, maybe we kind of push down to those lows and kind of shake out and kind of stay in that 12,000 range of support and 14,000 level of resistance.
So you think we break this most recent pivot?
Yeah, I think for sure.
All right, cool. I got short at the end of the day. So where to from here? So we're looking pretty bleak with that market close there. But where to from here, sir?
I mean, we can jump into the top ideas.
Oh yeah, looking forward to this one.
All right, so I have a couple from your shakedown we'll run through, and then any other ones you want to bring up. First one, we have this Z-scaler, ZS.
Yeah, this looks, this has earnings coming up, so we probably don't get to see, we don't see this move before earnings. They got earnings, May 25th. So, it looks good. I actually had a buy stop through 169 today. Didn't get triggered. High of day, 168.75. Looks pretty good. It held up really well, but, everything is kind of depending on the market's, next moves.
All right, next up we have this Tesla.
Tesla? Oh. Long or short?
Either. Up through 600, short down through 560.
Oh, well, hey, all right, I like that. There's just been a cloud of bad news surrounding Tesla lately. They just had announced today that they're like 10,000 vehicles stuck in a factory, and they already missed deliveries last quarter. So they think these deliveries might get pushed back from Q2 to Q3 based on these cars being stuck, which would hurt their deliveries, which hurts their revenue number, blah, 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 blah. Mm-hmm. So, and then we heard about Michael Burry's, $500 million short? Yeah, $530 million short he's got on, something light. Both ways on this. To me, it's a no trade. I'm not touching Tesla. It's just too overlooked at and analyzed and shit.
All right. Next up, we have WYNN. WYNN.
Ooh, still got some strength. I like this one. So, these reopening plays took a little break today, but I definitely like this WYNN. Casinos look pretty good. The reopening plays have really been winning. So above this, 129, 130 area, I think that one still looks really good.
Mm-hmm. Next up, we have Shop, which had some news today. Their partnership with Google. That's still
do you know what the partnership was? I just saw that headline.
I saw the headline too. I don't know what the details were.
Great, looks like a great looking chart. We saw this back in April 28th when they had earnings. They broke out on earnings. They had huge earnings. They had really sick earnings, and that's kind of the beginning of when we saw the tide to turn, where even though like tech companies were having great earnings, we were seeing them still sell off, and that's kind of shop just fell victim to that. So I've been buying this like crazy in the long-term account a little bit every day. Added today, like right before the news, pretty luckily. I think this looks great for the long term, but you got to give it to these lows down here. But I think it's a great buying opportunity.
Yeah. I see here, so it's Google announcing that they're going to start letting the merchants like ourselves who use Shopify to come up in Google search, which in the past really hasn't been that much of a thing. So,
oh, cool. So we can get up on Google, I guess?
Will be good. Yeah, definitely a good thing for us. All right, next up is Domo.
Domo arigato, huh? This, a lot of these software names look so similar. This looks just like Zscaler. They're all kind of like fighting at these massive support levels they don't want to break down. So if they can break higher off this tight consolidation, could be a good risk-reward play. They got earnings coming out May 27th, though. So this probably is a no touch until after earnings.
Mm-hmm. And lastly, off the shakedowns is VRTX.
Vertex. Oh, tough close today. So it's working on a base here. We like it above this 220-ish area. Might need some time the way it closed today, but really more of a macro long-term trade, Vertex Pharmaceuticals, but it still looks like it needs some time.
Mm-hmm. All right, so I have two quick ones. First one is CDNS.
CDNS. Ooh, which way do you like it?
So I've been expecting this kind of shakeout through this 120, which has been pretty significant support, and just kind of pulling into that. So I'm looking for it to more than likely shake down through that 120, and then eventually, if this is just a shakeout of support, to buy back up through that 125 area.
Yeah, what I'm seeing here is you get this big-ass igniting day, May 11th. You see that big-ass green bar at support? Mm-hmm. You take that out with some fucking ferociousness. We got ourselves a nice-looking short setup on our hands. Yeah. Where's everyone's stop in the world located?
First 120.
Yeah. So, I'll see you tomorrow, CDNS.
Yeah. Again, the other one was Shop, which you kind of mentioned. Again, same with you. I have it in a long-term account, continues to buy. But again, that 1150 area has kind of been an area, maybe for a swing. But that's, again, we kind of went over that one already.
A couple other things I'll mention is I love this Roku. It was trade of the week. It triggered today. Still remained very strong. Market sells off tomorrow, probably gets taken down with it. I do like this name for the long term. And, last but not least, Roblox, RBLX. It's technically in this just massive IPL base. If it can break above this 78 area that it stopped out on earnings, I bought some on this dip, but it's still got to break the 78 area. I think this thing can launch to like 100 the way this thing moves. So definitely like this Roblox a lot. And they just had a partnership with Gucci. Why not?
Now, is this something you would take up through 78 verse like the low a day, or are you going to have to give this like verse at way down?
So I already got some stock. I bought this dip on May 13th. You see that day where it really came in? Mm-hmm. And then I added a little bit the following day, May 14th. So I'm sitting on some decent stock. If it goes sideways a little bit more before the 78, I'll add some on a purely momentum basis. Like I'll give it a very short leash on any ads. But anything else, like you can see how this name trades. You have to give it room. On earnings day, it was a low of 65, high of 78. 2 days later, it pulls all the way into 67.50. So it's a very, very wide and difficult name to trade. You just got to give it the room. But if you catch it on a breakout, it can really, really, really go. You see the move it made on earnings day. It was up like $16. So anything I add will be a tight leash, but I'm giving my core position proper room.
Yeah. And just like that day alone, it was a 20% range that day. Like that's crazy. It's a big.
Right. I said it could hit 100. It only needs one of those days to do it over that range.
Yeah. So. All right. So we had one question. I had a conversation with Mark this week, and I figured it'd be easier to just go over for like a minute or two. And the question was, what account should you trade in versus what account should you invest in or hold long term? So very simply, there's two basic accounts. You have your taxable account, you have your retirement account. Most people tend to do this the complete opposite. They put their long-term investments in their retirement accounts, and they actively trade their taxable accounts. This is great for if you want to pay more taxes. That's a great way to do it. We focus on.
If you're living off trading like I am,
well, that's what I'm saying. It's just like in this simple and this is where me and Mark kind of got into it. Where in this very simple example, if you have these two accounts, you're better off trading in the Roth. Again, for someone like you, Shake, you Interactive Brokers, you have the trading account. But for the average person who has these two accounts and they're profitable, they'll be better off trading in the Roth or the retirement account and then trying to hold longer term in their taxable account from a tax standpoint. Now, there's a comment.
I'm with you there.
Yeah. So there's a comment saying, it's like, don't tell me what you think, tell me what's in your portfolio. Like for myself personally, we have the big picture model, which is the 12 major ETFs that basically encompass the S&P. They're all the lowest cost ETFs, about 10 basis points. Those I put in my taxable account through a broker like M1, which is automated investing. I put money in weekly, it continues to invest, and I pay on the dividends and the minor amount of capital gains when I have to rebalance, quarterly or annually. That's how I invest my long-term account. I have a retirement account that's at M1. We'll call it my Roth IRA. Very same thing. I instead of having the individual ETFs, I pick a handful of stocks between 5 to 15 names I like for the long term. We mentioned Shop before is one of them, Amazon, Baba, names like that I'll continue to add to. And then from a trading standpoint, I'll have an account like my SEP IRA that I can continuously add to, and that account I'll trade more aggressively. So again, everyone's situation is going to be different. If it's a very simple A or B, and it's which one should you trade in, retirement or taxable, from a tax standpoint, you'll benefit from trading in the Roth. But again, everyone's situation is going to be different. So hopefully, Mark, that helped answer some of those questions that we had this past weekend. And for anyone else who's watching this, hopefully it helps as well. Okay, so that was that question, Shake. If you want to get into good and bad trade.
Yeah. I'll just talk about what I've been doing. I got into this Roku today, bought a little bit yesterday. Honestly, I mean, the way the market closed today, I'm anticipating being pushed out. I mentioned I got short the NASDAQ end of the day. It's as much a trade as it is a hedge. Hold on. As much a trade as it is a hedge, because I bought a few things today that I like. So, here's what I was looking at with the NASDAQ. We have this 327 area that's just been resistance, support, turn resistance. We were watching it all day. Could we push through that area? We were looking so good off the open. We saw tech strong. And then at the end of the day, we saw some harsh selling. So that's when I got short against that 327 area. But the main reason for the short is because I bought Roku. I'm in this Roblox. I bought this Roblox on this pullback and then added on this day. So, and what was the third thing? Oh, and then I bought some Square, too, down here. But that gave everything back. So I slimmed down on this position. The Square is just like a lot of the software names. Software and tech names we're seeing, huge support. Doesn't look like it wants to break down yet. But, if this market wants to come down, it's going to drag everything down with it. So, I got that hedge on. I got these few names working. Oh, and what's up? You holding Walmart?
Me? No. You still have it?
Oh, you...
I've been at Walmart for months now.
Oh, okay. Well, we bought it at the same time. This 130 here, March 10th, right?
Mm-hmm. And I got stopped. Remember, we talked about this a while ago. I got stopped out literally that little pull into 130.
Oh,
that was like
right.
shift from that break-even stop to pivot. That was like the day. That was the trade that I was.
I remembered. I was just trying to bring it up because they had some nice earnings.
I thought
I'm still in
it. Okay. Sound like Mo.
I sound like what?
So you sound like Mo. A little combo.
Yeah. Trying me today, Mo. I saw you. All right, what do you got going on?
So the only really one, other than the names we've been holding, again, you and I both been in this UPS. The one, I guess, kind of bad trade, just a failed one, was this BBY. This was last week. I took it up through 120 into that blue sky breakout, came right back, and this was one where having that break even stop as it came back to my price made sense because I just didn't lose anything, and I can just as easily buy up through 122 or 124 in time. That really has been the only trade. Again, everything else from a swing standpoint. Still in this DRI, still in MIMX, still in AbbVie, still in UPS with you. So a lot of names are just, a lot of the swings just been holding and just taking kind of little shots here and there. And, we're just not seeing the breakouts working right now.
Yeah.
So that's all. That's the only one I had. And then other things setting up is this Pepsi, this PEP through 148.
PEP? Yeah, you know me. All right. Yeah, that needs some time.
Yeah.
Just not a ton to do right now. Market's been under pressure. It's been difficult. You want to get into book of the week?
Yeah, I know the one thing you wanted to mention, inflation. I don't think we talked about that earlier. I think we skipped over.
Oh, I was just talking about, we have a Fed meeting tomorrow, and the Fed's just not been really recognizing the inflation aspect, and we've been seeing the 10-year on the rise. We've been seeing mortgage rates on the rise. We're seeing traders price in that they're going to move up their rate raising schedule, all these things. So tomorrow it's going to be very important whether or not we hear the Fed kind of recognize the the inflation that's going on. You know, lumber prices are up 400%. We see it in our everyday life. Gas is insane. It's it's almost $6 a gallon in parts of California. So that's the number one thing holding the market back. That's the number one thing that we're going to be hearing about for the next few months. So it's just important to know what's moving the market right now, and right now it's just everything inflation related.
Mm-hmm. So what book of the week you have for us?
Oh, I started reading this Contagious again. I picked it up, I put it down. It had an interesting lesson. Contagious, Why Things Catch On, Jonah Berger. I actually found out about this song from book from a Nipsey Hussle song. He fucking raps about it. Whatever. So he was talking about the likelihood of people to share different things on social media, and let's say the 4 categories were like happy, sad, angry, and like awe-striking. So happy posts, they got shared a lot. Sad posts, because they struck emotion, but they for some reason didn't get shared the most. But like awe-striking, like things that made you like say wow, or kind of jaw-dropping things, those were the most shared events. And then next after that, in front of nice things, were things that made people angry. And
Mm-hmm.
Number one reason why we don't let fucking politics in the chat, because people just love going crazy on politics. But it was just very interesting to see the human nature aspect of it, of things that rile people up are the things that are the people want to spend their time on and get passionate about, and things
Mm-hmm.
like that. So just putting some data behind the feelings is always very interesting. What you got for me?
So I finally finished The Origins of a Financial Crisis. Again, very technical book.
What was it called? I lost my...
The Origins of Financial Crises. They honestly really don't really talk about any specific crisis. It's just a lot of kind of like college type of examples. They do mention inflation, which in one part, which kind of goes on your part with the Fed meeting tomorrow, where central banks' overall objective is to kind of keep inflation around 2%. And the reason why they want to keep it around 2% instead of 0 is they want to be able to, when you have inflation moving in its favor, they can increase, rates are high, they can bring rates down. If inflation does 0, they don't really have much ways to stimulate the economy by bringing rates down. Another one is kind of a secret, not a secret, but a subtle way to kind of increase tax revenues. When you have inflation, you have assets such as stocks and real estate that will appreciate, and then you'll have capital gains, and that's another way they can increase tax revenue. So they go in a couple little ways of...
I didn't think of that. Smart.
There's a few, and there are other ones like kind of wages, where people aren't going to, people get really pissed off about wage cuts, and inflation's kind of like a subdued way to kind of cut wages without people really feeling it, where that's why we see like
wages rise, but they don't effectively rise.
And certain wages will. So like a skilled job, those wages will increase, but you can have jobs that aren't necessarily as that kind of get replaced with like a robot. Like those types of jobs can stay stagnant, and those the minimum wage, like those will always want to raise those minimum wages because we have inflation, and that's where those kind of things come into play. So they had a couple examples of how there's why these investment or the central banks want to have inflation around 2% and not 0. But that was really the only thing I took from it. Again, just not a book I would unless you want to have a book to fall asleep, then read this one. So that's all I got.
It honestly sounds like so relevant to what's going on right now.
Well, no, honestly,
I want this one.
Of the 300 pages, I literally took a picture of this 1.5 page on this inflation part that was very helpful. But the other, this is again a perfect example. When you read a book, there's like the one gem you find out of it, but you have to read the whole book. So I had to go through the 200 and something pages. I found the 1 or 2 pages related to inflation that I felt was helpful, and I feel like that's what a lot of books. But so
that sounds inefficient.
Well, I don't know. Unless you tell me a better way.
All right, that's all we got. Wrap it up.
That's all we got.
All right, guys. Till next time. Till number 88. Chart Talk 87 out.
Yeah. That's
What?
It. No, I was gonna say we didn't mention us being voted number 1, but who cares?
Oh, but it was fucking Fugazi influence size. Yeah,
Yeah.
I'm good.
All right.
See you guys next week.
On to next week.